So we're going to chapter 29, statement of comprehensive income. We're talking about statement of comprehensive income. We're talking about items that brings about our trading as a business. So we trade. Revenue comes in, income comes in.
Yeah.
So that's about those items that we put together in our financial transaction. That's
Sure.
what we call comprehensive income. So let's go down. The purpose of a statement of comprehensive income. Businesses use the statement of comprehensive income to calculate the profit at the end of the financial year. The financial year is a 12-month trading period and can vary from the calendar year. For example, it might be from 1 June 2015 to 31 May 2016. A business normally calculates its profit using two steps. First, it calculates the gross profit. This is the profit made before expenses or overheads are subtracted. It is found by calculating GP, which is revenue minus cost of sales. So to calculate your profit, listen, we have the gross profit, which is the profit before expenses, before deducting expenses. Before you deduct your overheads, that's your gross profit. So the formula for gross profit is revenue minus cost of sales.
Revenue minus cost of sale.
Are you with me?
That's gross profit.
That's gross profit. Clear?
So gross profit is profit before the expenses.
Clear?
Before anything, okay.
Is it clear?
Sure.
Then we have the operating profit, which is gross profit minus expenses. Is it clear or not? Is it clear?
Yeah.
Good. We move on. Retained and distributed profit. Some of the profit made by a business at the end of the year is used to pay taxes. So traders and business partners may pay income tax, whereas limited companies may pay corporation tax. The profit after tax can be distributed profit or retained profit.
What?
So the profit after tax can be distributed or retained. So what they are saying is this: profit will be made by the business, right?
Yes, sure.
That is why you have the comprehensive income to calculate your profit, your gross profit and the net profit. So as soon as net profit is decided or determined, so the profit made, that net profit could be a retained one or distributed one. It is distributed if it has to be returned to the owners, like in terms of dividends. Do you get it? That means you have to share the profits to the owners of the business as a return on their investment.
Yeah.
Or you put it back into the business. You return the profit into the business. That's what we call retained profit. Is it clear?
Yes.
We move on. The statement of comprehensive income itself. So the statement of comprehensive income shows the income and expenses of a business during the financial year. So we call it income statement because it tells us about money that comes into the business and what the business spends. So the income and the expenses of the business are the items in the income statement. So what are those items you find in the income statement? You have your revenue, you have your purchases, you have your sales, you have your
So it's another document.
carriage. Yeah, we are here. We're there. This is a format for it. So you have your revenue and your cost of sales. So to get your gross profit, it is revenue minus cost of sales. Is your gross profit. As soon as you get your gross profit, you need your operating profit. Your operating profit is gross profit minus overheads. That's your operating profit. When we talk about operations, we are talking about administration and other expenses of the business. These are whatever you spend in the course of operation or in the course of operating or working in the business. Then we have the finance costs. These are costs on loans. Maybe you have to pay interest on loan or the rest. At the end of it, you have your profit for the year. So profit for the year is your gross profit minus your operating profit. Your gross profit minus operating profit minus your finance cost.
Minus finance cost.
Or you say profit for the year, which is the net profit, is gross profit minus expenses. Do you get it? Gross profit minus expenses is your profit for the year or
gross
net profit.
Okay, I get it. Gross profit minus expenses.
Do you get that? So as soon as you have your net profit, you have to pay taxes. You have to pay tax.
Yeah, sure.
You pay tax from your profit.
Sure.
Do you get that?
Yeah.
So as soon as tax is paid, what is left is called the profit for the year after tax.
Sure.
Is it clear?
Yeah, I get it.
So we'll move on. So what are the items in the statement of comprehensive income? Number one. Are you there, please?
Yes.
So what are the items in the statement of comprehensive income? The first one, revenue. Revenue is the money the business receives from selling goods and services. Revenue must not include VAT. This is because VAT does not belong to the business. The revenue, okay. So basically when we talk about revenue is the amount of money you make when you sell the products. You cannot put VAT on it because VAT is not part, or it does not belong to the business. Value added tax does not belong to the business.
Value of the tax.
Value added tax is an indirect tax.
Indirect tax.
Yes. So it has to be remitted to government accounts.
And that's from government.
These are taxes you pay for consumption. So it will not be part of the sales of the business. They have to be remitted. So as soon as the business reduces, as soon as you buy a product, you pay tax.
Sure.
As the tax you pay, are you with me? The
Yeah,
tax
yeah.
you pay is remitted into government accounts.
Sure.
That is why it is not part of your revenue. Clear?
I get it.
Another, the cost of sales. For cost of sales, we're talking about the cost of raw materials, the cost of carriage, the amount you spend in bringing the products to the premises. No, not wages. We call them carriage.
Carriage.
The amount you spend in bringing the product into the premises. These are part of your cost of sales.
Sure.
Clear? Is it clear, please?
Clear.
Then our gross profit will be your revenue minus your cost of sales. Clear? That's your gross profit. It is gross profit. Gross profit is the profit before expenses are deducted. Profit before overheads. Clear?
Before overheads.
Yes. We have administrative expenses. These are general overheads or expenses of the business. Examples are salaries, wages, telephone bills, IT expenses, and the rest. Stationery. These are all administrative expenses. Clear?
What?
Administrative expenses.
Okay.
Admin. Your admin. What they spend. They pay salary, they buy equipment, all these things are part of expenses. Clear?
Sure.
Operating expenses. And any expenses not included in administrative expenses above may be included in the operating expenses. What are operating expenses? Whatever expenses that does not go in, that is not aligned to administration are all operating expenses. Operation means the day-to-day running of the business. So all expenses that goes into day-to-day running of the business are operating expenses.
Sure. The short term.
The short term, the short term expenses. Clear?
Yeah.
Or you call them revenue expenditure.
Okay.
The selling expenses, the amount you make. These are, when you talk about selling expenses, these are amounts you spend before you are able to sell your products. Like commission, you give commission, you spend advertisement, you distribution. These are all part of selling expenses. All expenses you incur before selling the product. Clear?
Clear.
Finance cost. These are interest that you have to pay. Is it clear? Is it clear, please?
It's the interest that I have to pay.
Because you take a loan. Is it clear?
Sure.
Profit for the year. It is the cost of finance which is supplied from the operating profit. So the operating profit minus your cost of finance. That means gross expense, gross profit minus all overheads. That is your profit for the year.
Gross profit minus expenses.
Then profit for the year after tax. This is the tax amount, the amount of tax deducted from the profit. That's your profit after tax. Clear?
So what is the formula of it? It's the same.
Profit minus the percentage of tax you have to pay. Government are the ones that tell you. Government is the one that will tell you what you have to pay in terms of tax.
Okay.
Certain percentage of your profit has to be paid as tax.
True.
Government decides that.
Okay, yeah, sure.
Clear? Is it clear, please?
Clear.
We'll move on. So, how might the statement of comprehensive income be used in decision making? Are you there? What are the uses of the statement of comprehensive income when decision has to be made? A statement of comprehensive income shows business owners and managers the amount of profit made by a business in a financial year. However, the information contained in the statement might be used to help make some important decisions. Some examples are outlined. Number one, We use our statement of statement of comprehensive income to make investment decisions. Should we continue putting money into the business or not? That will be decided by the profit we make. If the business is making profit, if the profit for this year compared to last year is higher than, if the profit for this year is higher compared to the previous year, then we can continue the investment. Do you get the point here?
Yeah, sure.
So, statement of comprehensive income can be used to decide if investment should continue with the business or not. Cost analysis. The statement of comprehensive income will show that what has happened to cost during the year. It might show, for example, the cost of sales has increased sharply as a result of a business. A business can identify reasons for this and take measures to bring costs under control. A business might decide that cheaper suppliers of raw materials must be found, or that wages of production workers must be brought under control.
So
Another reason why, I'm going to explain anyway. Another way to use the statement of comprehensive income for decision making is to decide about cost analysis, how to reduce cost. When we have a statement of comprehensive income, you compare it with your last year. So the cost of sales of last year is lower than the cost of sales for this year. This year we have an increased cost of sales. Why? We will be able to trace it. We will be able to trace why we have an increased cost, to be able to know what to do about it.
Okay, sure, yeah.
That is the point they are making here. So with statement of comprehensive income, you'll be able to control your cost.
Yeah, okay.
The third one, basis for future forecast. You have information of the previous year. You have the financial statement. You have the comprehensive statement of comprehensive income of the previous year. You have this year comprehensive income, right?
That's cash
You
flow.
can compare and contrast and use it to decide what happens next year.
That's cash flow forecast.
Do you get it?
Yeah, sure. It's the same as the cash flow forecast.
Yes. Not cash flow. It's not just about cash flow. It's about the performance of the business.
Okay.
So what you are expecting for this year. So you might be able to find some similarities in the previous statement of comprehensive income and the present statement of comprehensive income,
okay, sure.
which you can use for the future forecast. Clear? Making comparisons. So with statement of comprehensive income, you can compare the previous year with the present year to know your performance. If you are doing well now than last year, or you are not doing well as last year. Clear? These are the reasons why we can use a statement of comprehensive income. The nature and importance of profit. Are you there? So we go to the nature and importance of profit. Profit is a driving force in most businesses. There are few, if any, which attach no importance to profit. The exceptions, perhaps being charities. Profit has a number of functions. It is the prospect of making a profit that motivates many people to set up a business. Without profit, there will be little incentive for individuals to risk their time and money in business venture. The nature and importance of profit. Profit is always most of the people's motive to set up a business. Without profit, it is difficult for people to put their money and time into a business. So they don't want to risk money. They don't want to risk their time if it is not going to be profitable. That is the point they are making here. Do you get that? For economists, they often refer to normal profit. This is the minimum financial reward an entrepreneur must receive in order to maintain interest in a business. In order to maintain the interest in a business. If a business does not earn this amount, an owner will pull out. So the normal profit is just the expected profit you should make as a return or as a yardstick for you to continue your business. That's for economists. Profit level affects the flow of money into and out of different industries. Money will flow into expanding industries where profits are rising and out of declining industries where profits are falling. This is a natural process and helps resources in the economy to be used more efficiently. What they are saying is that profit also allows investment. Profit brings about increasing investment. If this industry is not making more profit, people will stop investing there. They will take their money off to an industry or to the market or to a market that is making profit. So with profit, there's always going to be interest on investment. So if the industry is making profit, a lot of people will be attracted, then investment will increase. More money will go into that industry. If the industry is not making profit anymore, more money will leave. More money will leave the industry. There will be disinvestment.
Obviously.
Is it clear?
Yeah.
Any question about that?
No.
So that ends chapter 29, profit. Then we have the multiple choice questions now. So, MCQ for chapter 29.
Okay, number 1. Wages paid to production workers.
Sorry, please. MCQs for chapter 29. Statement of comprehensive income. Question 1, please.
Wages paid to production workers is an example of which of the following? A current asset. B, finance cost. C, business expense. D, cost of sales. Well, it's D.
Cost of sales? No. Wages. Wages is part of business expenses. It's C.
Yeah. Sure, it's
Question
business
2.
expenses.
Question 2.
Okay, business has a revenue of.
There are figures. Let me have the paper, please. There are figures, yes. The business has a revenue of 239,500, okay?
The cost of sales.
Revenue 239,500, okay? And cost of sales. Cost of sales of what? 154,000.
Yeah.
And expenses of 65,000. They said calculate the value of operating profit. So operating profit will be revenue minus cost of sales, which is 005,58185. These are our gross profits.
That's gross profit.
So gross profit minus
Expenses.
Expenses 005 0 to 120,500. Wait,
there's something wrong.
no, 20,500. Yeah, this is 85,000. It's 20,500. So the answer is A. Did you get it or not?
Yes.
This is it. Our gross profit. We have our revenue to be 239,500. Our cost of sales is 154,500. Our expenses is 65,000. We are told to find the operating profit. To get the operating profit, it is revenue minus cost of sales. That gives us 85,500. Then gross profit minus expenses will be our operating profit. So 85,500 minus 65,000. That's 20,500. So the answer is A. Question 2, A. Question 3, please. Question 3, please.
Okay, a statement of comprehensive income, it might be used to do which of the following? A, calculate labor turnover. B, help make investment decisions. C, measure the value of assets in a business. D, calculate the liquidity ratio. That's so obvious. It's B.
Help make investment decision, yes. Question 4.
You make decisions of investment.
Yeah, question 4.
Which one you want to make it cheaper or something? Number 4. Which of the following is a function of profit? Okay. A measure of global economic success. B, used to calculate the break-even point. C, measure of business performance. D, measure the labor productivity.
Profit. What is it used to measure? What's the function of profit here?
C.
Measure of business performance. Yes, that's it.
Yeah, it's so obvious.
So that ends chapter 29.
Yeah.
Statement of comprehensive income.
The global economic success.
Recession, that's when there's
else.
a decline in economic activity.
And